All right. Well, welcome back to the iWealth podcast. And today we're talking about Q3 and kind of what's all happened here recently. So bring us up to speed, Brad. Tell us a little about what's happening right now with Q3.
Yeah, it's been an interesting year, hasn't it? I mean, we go back and it seems like the pandemic just happened, which is over a year ago now. When you look at returns, Matt, the last trading day in September, we were down that week about 5%. That's the most volatility we've seen all year. Like this market has been going up, and there hasn't been as choppy. We're used to things going up and coming down, and it's just been steady. And so it was good to see that, actually. And some people are like, well, what are you talking about? But you need to have volatility, and I believe that there's a 10% pullback, maybe yet this year, that's coming.
Yeah.
I've been worried about inflation for quite a while, and if I had Sean and JP here, they would echo that because I talk about it a lot. But Ryan Dietrich, for instance, is head of LPL research, and I had a chance to listen to him in Florida a couple of weeks ago. Met with a couple of our other product partners that we use, a couple economists, and they all say this is transitory inflation. And a lot of people are like, transitory, what's that mean?
What does the word transitory mean?
Yeah, it's just been this buzzword, and the Fed has put it out there. So the Fed is saying this is transitory, which means temporary.
Okay.
This inflation spike that we're seeing is going to level out, they think, next year and go back to more normal 2 to 3% for inflation. I have talked to my business owners. I also go out to eat. You purchase things. There's no cars on the lot. There's all this stuff going on. There's signs on doors where people can't find people to employ. Oil's at $80. It's like, how is there not inflation? And there is, but how's it not going to sustain? And they all say it's going to level back out. And so we'll find out. One of them is starting to change their tune a little bit, but that this could stay hotter longer, meaning inflation stay up a little bit. And inflation isn't necessarily good for us. It's not horrible, but it's not necessarily good. When you go to the store and you buy groceries and it costs more, that's not good.
Yeah.
When your car costs more, when your used car costs more, those things aren't good. So we're seeing those inflation worries out there. We had the fastest bear market ever during COVID. It was a couple months long, and just from peak to trough, just bang. And then we had the fastest bull market ever. And so the average bull market, Matt, lasts 5 years. This bull market that we're currently in started last June. And so we're, 15, 16 months into this bull market. If they average 5 years, the economists we follow think that we're going to get 4 to 5 years out of this bull market that we're in. Because I keep getting people saying, well, Brad, this thing's overheated. Like, I don't know if I want to put any money in this. I mean, as we're talking today, we're 2% from the all-time highs that we've had in the Dow. And so I think that, long story short, I think that this bull market continues, but I think there's going to be some volatility that we haven't been used to. So the concept to the people that are listening today is that they just need to make sure that they're well diversified, and they have to be able to weather the storm, meaning don't have money in a stock market that you're going to need to buy your next vehicle, or you're going to need 6 months from now, because it might be lower than it is today. But the long-term trajectory, the tailwinds behind us, I think those things are here to stay.
Very cool. So that's kind of the big picture.
Yeah.
Is there anything else that we should know about Q3 here?
Yeah. So personally, I always like to have a personal touch in this. I'm going to be vulnerable a little bit, but I sat down with Trudy.
What'd you do this time,
Yeah,
Brad?
exactly. I sat down with Trudy right around July 4th, right in that neck of the woods, and we were having coffee one morning, and I looked at her and I said, I don't know what's going on, but I can't get happy. And I'm not going to get too far in the weeds in this, but it wasn't like, I didn't feel like I was depressed and that kind of thing, but I just couldn't get happy. There were wins going on in my life. The business was good, and I'm healthy, and family's good, and everything was good, but I just couldn't get happy. And so one of the things that Trudy mentioned to me, she said, well, maybe you need to drink your own medicine and turn off the news. And I've told clients to do that in the past.
For years. Years and years and years.
Yeah. And so I did. Even to this day, I read Wall Street Journal for 10 minutes a day just to look at some headlines.
Yep.
And I watch CNBC 10 minutes a day in the morning when I'm getting ready for work, and that's it.
So the big question is, did it help?
It helped.
It did.
I'm sitting here 3 months later or 2 months later, and I'm more happy.
You got a little wind in your sail.
I do. What's interesting, Matt, is you actually still pick up on quite a bit of the main topics.
Because everyone will be talking about it because they want something to talk about.
Or you pass by a window and a news channel is on or something like that, or you get an update or something. So you still kind of get it, but I'm just not. I was kind of a news junkie. I'm kind of a political junkie. And I just needed to turn it off. And so anyway, so that part's been good. I've also worked on this thing called Vivid Vision. So I'm trying to figure out, 3 years from now will be my 30th year in this business. I'm trying to figure out what does that look like? Yeah. And what's going to make me happy 3 years from now. And so I share all this because I think it's just really important for us as people, as business owners and things like that to try to get our heads straight around what makes us happy. It's not the new vehicle in the garage or the new boat on the boat lift all the time. You can fill your cup with stuff.
Yep.
But I think if you can get back to your why, like your purpose, I just think life's a lot more enjoyable that way.
That's great advice.
Yeah.
Totally great advice, especially for business owners.
Right.
Because they're kind of a special breed of people, at least in my mind.
Yeah.
So.
And you and I, we've talked about who you hang with is who you become. Well, if you're hanging with the news all day long, you're going to kind of become that talking head too.
Yep.
And so anyway, it's been a good experiment for me. I thought I was cured. And then on CNBC a while ago, they were interviewing a politician. Yeah. And the hairs on the back of my neck started to stand up. And I'm like, okay, I'm not healed yet. I'm not ready to go back.
Not ready to have a solid diet of it.
Yeah.
And it's hard because every time you look at your phone, you get a little update.
Right.
And they try to sensationalize everything, and it messes with your head. It scrambles the wires.
Yeah. So the bottom line, I think, with this conversation is Q3 was a good quarter. We're down a little bit right at the end. We've already pretty much made that back. Expect more volatility in the next, 60 to 90 days. But we still expect a good outlook for next year with what's going on with the market. And if you're like me, turn the darn news off.
All right. Well, we'll see you back here next time.
All right. Thanks, Matt.
Bye.